Talk to me about crashes and downturns, Brian, and what causes them and how an investor should behave.
Yeah, so if you study market history, as you should, if you're going to put money in the market, you'll see that crashes and downturns are nothing new. They actually occur on a regular basis. And what's funny about crashes and downturns is they naturally make sense. They made sense to me, right? I didn't understand why stocks went up, but it's not hard to figure out why stocks are going down, right? Today, the stock market is in a bear market. Things are crashing. What's happening today? Inflation is back. Interest rates are rising. There's massive supply chain issues. There's a war going on in a world that may or may not escalate. There's so much uncertainty right now. It makes total sense why investors in the market are crashing. And if you look back historically, some of the biggest crashes in the history of the S&P 500, they've been associated with big negative macro stuff, right? So the
Mm,
market crashed in February of 2020 to March of
mm,
2020. COVID makes sense why the market crashed, right? 2008 to 2007 to 2009, the great financial crisis, right? The housing bubble. People were getting kicked out of their houses. Banks were failing left and right. Makes sense why stocks were crashing. Then there was 2000 and 2002, the hangover from the dot-com error. Plus, there was the September 11 attacks. There was the war that was raging in Afghanistan and Iraq. Makes sense why stocks were crashing. 1980 to 82, right? The inflation rate was double digit. Interest rates were 20%. And other crashes were caused by Watergate, in the Vietnam, the Cuban Missile Crisis, World War II, the Great Depression. So macro events usually are associated with mass changes in investor psychology, which is associated with mass changes in prices or stock market crashes. The good thing for investors is that if you hold through those crashes, which is very painful, very, very painful to do, the market historically has always recovered from crashes and has always gone on to deliver all-time highs again. So if you're going to invest in markets, you have to be ready, willing, and able to hold through extreme periods of downturns. And boy, is that painful.